Hello and welcome to FTT Chats. I'm Liz Lumley, and this is our special series dedicated to business banking. So today I'm sitting down with Dr. Oliver Prill, CEO of Tide. Hello, Oliver. How are you?
Yeah, very good. Thank you for having me.
Excellent. Thank you so much for joining us. So, of course, as I mentioned, this is part of our FTT Chats business banking series. And we're really going to focus on, the SME market and the business market and what's going on in that world. And I'm a firm believer that I think, you need to figure out problems and find solutions to those problems. So I really wanted to talk to you about with Tide and working with your customers and looking at the SME market, what are some of the biggest issues they're facing? What are the main pain points that you're seeing in this area?
Yeah, very good question. You probably have to answer that in two time horizons, right? I think one is during the COVID crisis, what are the specific issues businesses are facing to that during that time? And then more generally, what is why does business banking not really work for SMEs? So maybe let me take those two in turn. So, I mean, clearly in the crisis, a lot of businesses have been in survival mode. So if you've been on the, especially if you've been in some form or shape, in the physical business, so hospitality, physical retail, that sort of, sector, you've been, it's been a really, really tough time. People have been fighting for survival. And so that has really led to people, not really focused on anything else but surviving. You probably have in the middle a segment that was quite physical and that is now being able to take advantage of digitization. So there are a lot of businesses that may have had, stores. They didn't really have an e-commerce site. They didn't really do anything online. Now had to radically shift their business models. That may be online, maybe some of the hospitality sectors, going into delivery, not realizing, not ever having thought about that before. And then I think there's a third sector that often is sort of negated, which is businesses that actually thrive in the new environment. So there are actually a lot of people. No one wants to talk about doing well in a period that is really going to go down pretty dark in history. But if you've had business models that sort of focus on support of the NHS, we see a lot of growth in there. We see a lot of people taking advantage of the new environment. So we had record numbers of people going into business last year. So it's a very, very diverse set in this COVID environment. However, coming back to your question, I think the more fundamental problem that small businesses in general face is still the same, which is that no one goes into business to do finance and admin, right? I mean, maybe, unless you're an accountant actually offers as a service, it is sort of a necessary evil. And what people often don't realize, what makes businesses very different to consumers, is that in consumer, to a large extent, you can stay away from a multitude of financial services. Probably can't stay away from payments, right? You probably shouldn't stay away from pensions, but many people do. You may dabble a little bit in credit, especially on the mortgage side, but generally in financial services, you can be quite selective. If you're in business, that doesn't really happen, right? In business, you need to write invoices to your supplier, to your customers. You need to account for your expenses. You need to do the whole accounting system. You need to do taxation. If you have employees, you have to do payroll. So all these, you need to insure yourself. So all these financial tasks that you're, confronted with as a small business owner. And remember, 98% of businesses in the UK don't have a formalized finance function. So it is really literally the owner or their trusted lieutenant that has to deal with these myriad of issues. And the problem is all these financial systems don't really work well together, right? So you talked about business banking, which is, for example, Tide sees itself as a business financial platform, because we actually think business banking is the wrong definition. It is not only banking, it is actually all the financial admin. And why is it that these sorts of finance and admin space work so poorly? The reason for that is that in the other thing, while not being able to get away with it, they all need to work seamlessly together. So take a good example. Let's say you're an independent architect, right? You have a project. You will go around buying things for your, for your clients. You need to categorize that, and you need to take all that information, write an invoice, maybe you want to factor the invoice, you want to insure the invoice, you need to track, whether the money is coming in. All of these sort of, once it comes in, you need to assign, the invoice to the incoming payment and push all of that to your accounting system. So all of these things need to work seamlessly together, that they don't in practice, right? And so there's a huge time wastage. So to come back to your original question, the real issue small business owners face is that they are spending 40 to 45 days a year on reasonably unproductive finance and admin. And that's really the biggest problem the small business sector sort of faces in this particular space. And that's one that sort of Tide has set out to really solve holistically.
Yeah, that's kind of like my follow-up question. I liked how you said no one really goes into a business to do admin and accounting. That's usually for many other reasons. So how do you solve that problem then?
Yeah, so I think there are many, many different approaches. And, as Tide, we often get compared to banks, neobanks, sometimes traditional banks, and nothing could be further from the truth. I mean, we really see, ourselves as a business financial platform. And what we do is effectively, we try to make all of these things work together seamlessly, right? So when you actually buy something, you can immediately zap in the expenses and classify them with projects, right? When you then at the end of the month, when you write the invoice, you can you can take that information, write the invoices on the Tide platform. You can, as soon as the thing is typed, you can see whether it can be credit insured. You can maybe factor the invoice. You can chase it through the Tide platform. And when the money comes in, we automatically assign. So what we do is we make all of these things work together seamlessly. And then, the question is, what are we making work together seamlessly? And so typically there's a Tide label product. So we're not particularly hung up about self-manufacturing, but there is a proposition that works particularly well that we Tide label. So the Tide current account, for example, is if you want, a Tide design product from Clearbank. We do allow third-party products on the platform. We don't just stick them on there as a marketplace, but coming back to the problem we're trying to solve, right? We make them, we integrate them in a way that they work seamlessly with these workflows, which we call connectivity chains. And then last but not least, we recognize that businesses don't only need the tools, right? You don't only need an accounting software, but often you need the accountant. So we're just piloting what we call managed services, where you can actually find your accountant later on, your payroll provider, etc., as a professional support agent on the platform as well. So we have a very, very different game.
Interesting. I'm moving on to my next question, because I know you mentioned COVID and the pandemic, which it's hard to have any conversation right at the moment without mentioning COVID. But many people have talked about how the global pandemic has kind of accelerated many aspects of the financial services industry, including making a closer relationship between businesses and their financial services providers, and it's sort of like a new relationship. Have you seen this this acceleration of a new relationship between financial services providers and the SME market?
Yeah, so the way I would characterize it, you probably have different segments. So just to put the scale, Tide already serves 5% of the entire UK market. So 5% of all SMEs, do their finance and admin through Tide. So we always had a big penetration. We've seen that this whole digitization, if you want, so the adoption of digital, or let's say, app-based finance and admin services by SMEs has actually been going on for a long while. So the way we observe, though, is that almost the COVID period has served as an accelerator. So people that were sort of a little bit on the fence, said, look, I still want my local branch. I want, be able to speak to someone. Probably said, well, now going into a branch may not be the safest thing to do, right? So there are a lot of people that probably would have come around to it anyway, because what a lot of it in the past has been forced by branch closures and so on, has now, absolutely accelerated. So I would look at it, I would probably say we've seen an acceleration of 2 to 3 years in the sort of digital adoption, but it would have happened anyway. It's just something that was massively accelerated. And then there are a couple
Mm.
of other sort of secondary trends that I think, so this was COVID itself, and I think there are a couple of secondary trends that will sort of accelerate that going forward. So one is we have seen a decline in cash. And so in the final analysis, why did people like branches is because that's where you could deposit your cash. Now with Tide and other, challenges, we could have always done this through the post office, but people did say, look, if I have my NatWest branch next door, it's just easier. Now the problem is post-pandemic, a lot of these branches, because you see the general digitals, will no longer be viable. So I think we will need to brace ourselves for an entire wave of branch closures that will accelerate the trend post-COVID. And then there's the other secondary trend, which is the movement away from cash. So I'm not sure when you last used cash, but I mean, honestly, I used to be, and I'm very digital, right? But I used, if we were
Yeah.
honest, probably every other day pre-COVID, I would have had some cash transaction, right?
Mm.
Now, I mean, I can't even remember when I last used cash, right? I mean, just don't do it. I mean, most people don't even accept it, and if you do,
Mm.
it feels like almost like a dirty thing to do, right? So the other bit, the key driver of wanting physical presence, which is how can I handle cash, is also diminished by cash just going completely out of vogue, and I can't really see that going back. Once you're used to contactless payments and so on, why would you take the pain of exchanging physical currency?
Yeah, no, I agree completely. So we're going to continue our chat about how kind of the pandemic has changed the landscape very dramatically. I mean, pre-pandemic, there were a lot of inroads from non-bank lenders, from alternative lenders in this space. But the sort of the SME, support and government loans are really focused on the banking sector, which is kind of pushed those alternative non-bank lenders to the side for the moment. Do you think this is going to be a permanent change in the landscape, or is this just temporary because of the conditions of COVID?
Yeah, I think there are multiple things going on. I mean, for a government and a country that has invested a lot, from BCR grants to the recent fintech review, it's been quite disappointing, right? That the government support didn't really leverage the significant alternative lending sector. Many of them are fintechs, but many also are just non-banks, traditional non-banks. So
Mm.
I think that's well understood, and probably in the final analysis, most people in government would probably also agree that that was not, was not the, was probably not the best thing to do. It may have been the fastest thing to do, which is, I think, how they did it. So I would not read into it that government was against fintechs or alternatives.
Mm.
It just felt the easier way to do it. So I think that's sort of one thing. Second thing is, in the pandemic, what happened is that 1/4 of business. It's often important because people overinflate this. It's not like everyone got government credit support. I mean, in the end, if you look at the statistics, it's something like 1/4 of all SMEs. And what happened in a pandemic, because everything is guaranteed, and especially the bounce back loans were also extremely low interest, effectively it dried up any other lending, right? So during the pandemic, we had a scenario where really the lending sector has, first of all, massively expanded, and it was all on government schemes. And because the government chose to only do this through banks, it effectively caused the non-bank sector that had, by the way, 30% market share
Mm.
prior to it to immediately go down, basically evaporate. Now, going post-COVID, I think a couple of things to say. So I think there will be some return to a new normal, but it will be very different potentially. And it depends also how the government chooses to act. So number one is we will go back to commercial lending. I mean, someone needs to take the risk rather than the state. And by taking the risk, effectively, banks generally tend to go for prime risk, so very risk averse, which basically will give breathing space to alternative lenders who were better at risk assessment and who took the more risky proposition. And SME is just inherently risky, right? So if you're in the prime market, you will by definition. So there will definitely be a retreat. The second thing, though, is there will be, I think, some lasting consequences. So one of the lasting consequences will be that a lot of SMEs have now learned that in the crisis, effectively, they can only rely because the government only relies on banks. And so players like Tide and other alternatives always have to have, for those that are credit heavy, a story, to answer to, which is, in the crisis, who gives me the guarantee that the government will actually distribute support to you in a future crisis? So I think that's number one. And so I think we will see a dichotomy where those that are very risk averse and lending heavy will probably prefer the banks. Those that are, and remember, 2/3 of businesses don't really borrow. We talk about 1/4 in the crisis, but in general, even in good times, 2/3 of businesses do not borrow. I think those will be much more open to alternative propositions. But it's no question, this whole episode of only distributing government guaranteed loans through banks or quasi, in some of the civils things, some of the very limited extent alternatives were able to do it, but even there it was mainly the banks. That was a big setback for competition. It needs to be eroded. In the long run, the banks have no interest in really serving broad SME. Why? Because exactly what you say, they're interested in lending to prime customers, of which we're talking about, a third of the third, right? And the reason why SMEs are underserved is that most of these banks don't really regard them as profitable, customers. And so there will be some normalization, but it was a big setback. I mean, there's no talking about.
Interesting.
And I
So
think, by the way, also, I think people realize that.
What was the last thing you said? I missed very quickly.
But I
What was
think
the last?
people realize that. So I think
Yeah.
the government has realized that. And I think with the Ron Khalifa review and other things, I think there's sort of an olive branch being handed out that in future there will be a different way of looking at it.
Yeah.
I mean, they had
No,
to act very quickly, and so I don't think it was a considerate effort against fintech.
Yeah, no, I agree. I agree with you very much. It probably wasn't deliberate. Maybe it was an oversight due to the times. So I'm gonna combine our last question because we talked a lot about, you mentioned the death of cash and the closure of branches, which I don't think anyone would disagree with, and we talked a little bit about the sort of new relationship between the financial services sector and the SME sector. But I always like to look at this balance between digital and human relationships, and what is the right sort of desire from the SME market? What are they looking for from a digital offering with their relationship with the financial services industry, and how much of that human relationship still needs to be contained in that? What do you think?
So, I've been in financial services in one form or another for 25 years. So it went on with the branches, and it was first phone, and now it's digital and so on. So we always have this thing. And I think with the physical contact, you have to sort of unpack two different things. There's one, the whole notion around cash and cash handling. And then there is the relationship management, right? And so if you take these two things apart, on the cash, I think, as we said, cash will become less important. In many ways, the closure of branches and the emergence of the post office as sort of the cash utility. I think there will continue to be, by the way, a role for cash, but I think it will be concentrated through a utility, the post office primarily. And that's where the thing will trend. And I think it will become less and less a differentiator of a proposition, but you have to offer it. So Tide will offer, the post office is offering post office because we realize there is a group of people that do need to have these cash services. I don't think it's either or. Cash is cash. It cannot be done remotely. People will not overnight give it up, and you need to have them. And I think the answer to that is this utility role of the post office. The other one that I think is you're probably referring to is the relationship management. And I think that needs to be sort of, again, unpacked. So most people, when they go to the branch, don't see a relationship manager. As a matter of fact, many banks have actually removed the relationship manager from the branches into service centers, right? So you often don't even find them there. However, we do recognize there are people that want phone support, and that's why it offers that as an upgrade. And some people want a named account manager. And we, for example, offer that at Tide. At Tide, if you have a premium account, so an upgrade account, you actually get a named account manager sort of assigned to you. And you are completely right. There are people that just want to have that personal contact. I mean, I have that, by the way, in my private side. So, although, of course, I have digital bank accounts on the consumer, I have also a account with a bank where I know a person, because just some of my, it's just easier sometimes to give it to someone, and, they actually will out to you. So we do recognize that. And the question is, for us is it's really a question of what does the customer want. And so we offer it if you want it, but there's clearly a cost to it because everything else is so low cost at Tide. We do need to charge for it, but we do offer it and we do recognize that. However, we also have to realize there's a very large group of people that don't value that service. And so to charge them for that sort of service is the wrong thing to do. So we believe in choice, where people can make up their mind, is this an important thing for them or not? And as long as there's a significant number of people that want that, we will offer that service.
Excellent. Oliver, thank you so much for sitting down and having a chat with me. This is as you rightly pointed out, I think there's lots of different relationships and issues going on in the SME market, and interesting to see how it will survive and continue post COVID and move on and be more progressive. But thank you very much for sitting down and chatting with me with our special FTT Chats Business Banking series. Thanks.
Thank you very much for having me.